very good morning to all of you. We've just had two interesting sessions, which have really laid the groundwork, I would say, in the lead up to this discussion. And I think we're going to pick up on some of those themes that were discussed, mentioned by Ruchir and between Mustafa and Jenny in the previous session. Forecast 2030, which is not far away, right? 2030 is just 6 years away. How is the economic world order going to look like 6 years from now? Just to throw in some of the data and figures and estimates that are out there. The UN says that by 2030, the world population would cross 8.5, would be close to 8.7, which means 600 million more people. Out of that, about 1 billion people will be over 65 years in age. Goldman Sachs, since I have Todd here, has predicted that by 2030, 300 million jobs could be lost or demoted due to AI. Climate change, according to the World Bank, could push 100 million more people into poverty. And the World Bank also says that this could be the lost decade, where the average global growth rate would be about 2.2%, one of the lowest in the past few decades. I'm not trying to scare people here, not trying to paint a very gloomy picture, but trying to just show what are the predictions, some of the trends that are going to play out by 2030. I've got a very distinguished panel here that's going to do some kind of crystal gazing, deep dive into the major issues as to what's going to shape this world order. Laura, Todd, and Jeremy, let me just begin by asking you very quickly 2 or 3 factors according to you, and just the headline points, that are going to really play a key role in terms of really shaping the global economic world order by 2030, which is, as I said, not very far away. So Laura, let me begin with you. 2 or 3 key factors.
Thank you, Samir. I think the first point that come to mind, obviously, is technology and innovation, which has really transformed our lives in the last few decades. And every time we thought the new technology comes in a new phase, and yet there will be more new ones. And I think, of course, the latest recently is the AI and the general and the ChatGPT. And what will come next, we don't know. And I'm not a technologist, but I can say that we will anticipate more and more innovation that will change our life, change the way we operate, change the way we invest. So I would put technology as one. And the second one is sustainability, whether it's green finance, decarbonization, and all of that. Very timely with COP28. It is going to be a major theme going forward in terms of how the capitals are going to be allocated, how people invest, how it transforms some of the basic livelihood, how some of the more developing and emerging economy will have to benefit and participate in the decarbonization process, and that again require capital. And finally, I would say in the last few years, people talk about deglobalization. I find that we will be into a phase of re-globalization, or rather, if it is not using the term re-globalization, I believe in the fragmented world, whether it's regionalization or friendshoring, reshoring, or however you want to call it, connectivity will be the key. And that connectivity in terms of the technology and the innovation, how the common human good can benefit from those innovations. And of course, sustainability is the one theme that unites everyone. So connectivity to me is a very key theme for the next coming years.
3 points, Laura, from you. Yeah. The AI, technology, sustainability, and of course, the re-globalization is the term you use. Yeah. Jeremy, coming to you quickly, quick 2 or 3 points, and then we'll deep dive into some of those subjects, according to you.
Sure. Laddering a little bit off of previous comments, I think part of what I see is in the background, the internet itself, which is a software-mediated world, is just more and more deeply penetrating everything. And in fact, the birth of large language models, the birth of generative AI, was only possible through the birth of all the data on the internet. And so kind of organically, the internet is becoming more pervasive, and that software-mediated world is becoming more significant. And that's accelerating at an extraordinary pace right now. Now, in that context, in the background, gradually, we're seeing built up an entirely new internet infrastructure layer on top of what has been historically a data and information and communications internet layer. We are seeing built up a globally available internet infrastructure layer for economic contracting, economic value exchange, and tokenization is sort of a broader theme, but fundamentally, a new layer in the global economic system for mediating economic and capital activity has been born. It's been born over the past 10 years, and I believe that is going to accelerate dramatically over the next 7 years, if we're talking to 2030, and that will lead to dramatically higher velocity economic activity in the world, significantly deeper integration amongst different regions and economies in the world, and so I'm quite excited about both of those kind of software-mediated global scale internet phenomenon driving the economic universe over the next 7 years.
That's interesting. I mean, again, technology is really at the heart, and this whole new internet infrastructure, as you're mentioning. Todd, coming to you, I mean, your thoughts, I mean, 2 or 3 key factors. Do you agree with some of the points, or you have something?
It's gonna be a bit redundant, but I'd actually take it almost in reverse order, Laura. I actually massively believe in the global connectivity, and I think that'll be the absolute core. I think much of what we're talking about, issues around digitalization, technology, but play on Jeremy's a little bit. If you go back in time, you go back to early 1900s, electricity was that transformation. You go to the reference to the internet and computing power in kind of the 80s, 90s, and the emergence of that. Clearly, AI will play a role. Clearly, Laura's reference to sustainability, I want to always include reference to inclusion, because it's not just about sustainability, and I think that goes to my globalization reference and a connectivity, because all of that has to be done in a sense that we bring each other along in a global sense. If you start the initial conversation about countries that are succeeding, countries that are failing, having spent the last 5 years in Asia, as an American, perhaps there's a lot of conflict, but I believe we need China to succeed. We do not want to see an unsuccessful China. And so having everybody participate in a global sense in that growth and that new economy in the markets, I think is the most critical element.
I want to pick up on re-globalization, because that's something Todd also spoke about, so did you, Laura. How is that going to be possible, given that what we've witnessed in the last decade or so, whether it's the trade wars, the countries looking inward, we've had Brexit in Europe, countries are prioritizing, the domestic industries, subsidizing, just to make sure that the domestic industries grow. This has led to a lot of tariff wars. We have seen that between China and the United States. That could be a critical factor, wouldn't we, in terms of shaping the world order? So how do you see this re-globalization happening in this era?
Well, I think that we've seen the deglobalization has not been beneficial to a lot of people. And I think while it's already passé to talk about the benefit of globalization, we are in a new phase where we really need to rethink. I don't believe that countries or regions can exist in isolation. And in a fragmented world, you need more connectivities. And I'm talking about, in terms of capital, in terms of the benefit of innovation and technology and health sciences, as we've seen in COVID, where it worked and where it did not work. Re-globalization, whether it's a good word, but certainly realignment, where maybe the different parts of the world will realign in different way. And then you could have multiple players, multiple parties in one sector and different parties. So whether we can call it re-globalization, definitely is a realignment, I believe. And that the common good is what is driving all these possibility of realignment.
Todd, is a realignment possible, given what we have witnessed?
I think you have to also put it in context. If you think about sitting in this room, would we have been doing this a decade ago or 2 decades ago? 2 decades ago, probably not. A decade ago, maybe, and where we sit today. And I think that dependency or opportunity, Jenny's reference to capital flows. Look at the fact that this region, our economists predict, will generate something like 1.3 trillion of if you will, windfall from oil prices, that money is recycled both domestically and globally. And that connectivity is critical, and I think capital will find its opportunities, whether it's in AI, whether it's in sustainability, inclusion, whatever it may be, it will find that path. And so at some level, I respect the comment that we can't talk about re-globalization per se, but I think we need to contextualize that these things tend to ebb and flow. We've had a bit of a pullback, but to suggest we're not more globally connected today than we were 10 years ago, I think would be a wrong premise. And the question is to build from here, and I continue to have a degree of optimism that those capital flows will find those opportunities globally, not just regionally.
Talking about capital flows, Jeremy, and that's something you touched upon. Now, AI is really the buzzword. Some people are scared of it. It could lead to a lot of job losses, need a new form of workforce. And that could also impact, at least in the short term, some of the economies because the demographics are very different if you move from one continent to another. How big a factor is that going to be in terms of reshaping this order?
Well, I'm not an expert, but what I can tell you from my vantage point as a software technologist is that it seems like an enormous number of industries and fields are going to see dramatic productivity improvements through the application of generative AI and related technologies. And that goes all the way down to the shop floor and the impact of AI and robotics, and it goes all the way to the most advanced knowledge work, financial analysis, for example, which would, some would put up very high, or the practice of psychology, these high scale or even making medical judgments and recommendations, across the board, these high value roles in society are going to see dramatic productivity improvements. And so that's across the board. And I think the discussion that's, I think, more and more important to have is that will likely lead to mass job dislocation everywhere. And so when we think about the social instability that could emerge from the scale of mass job displacement, the potential for hyper-concentration of wealth in the companies that are essentially applying this technology, what do countries do to adjust to that economic picture? The role of universal basic income, what does the shape of society look like in a world where an enormous amount of the roles that exist today as productive work will not be performed by humans? I think that's absolutely within the realm in the next 7 years. And so the questions for me are questions of economic, social, and political questions that have to be answered, and the overall organization of society in many different types of countries is going to have to shift. And there's some very high risks that are embedded in that could be explosive, but there's also ways that we could see some really revolutionary social and political forms that emerge.
Todd, yeah.
Can I build on that a little bit? You made reference, if I could, Samir, at the beginning, Goldman Sachs research earlier this year talked about 300 million jobs displaced. I think you got to peel that back a little bit and plays on Jeremy's comments. That report indicates, I'm not the expert, but they indicate probably 2/3 of current jobs will be affected. Now, they're using the US and Europe as a baseline for that, and that extrapolates to almost 300 million jobs that will be displaced. We as an industry tend to focus on the positives from an efficiency. Productivity is expected to improve probably about 7% in GDP. We think that flows to about a 9% boost in the S&P. So we look at it from a pure financial, but the underlying assumption embedded in that is these people recycle. I do think Jeremy's comment, and that's where I go back to the global, not just globally geographically, but also the greater connectivity between governments and businesses to sort through what happens to that displacement of jobs and that baseline assumption that we have historically always created new jobs, created new opportunities as people have moved on. That's a huge assumption. And how exactly we transition that's not just a US issue. The U.S.'s transition with the IRA Act is a very different policy for the United States than what we would have seen at a point in time. But that is an expectation of something like $3 trillion of investment in renewable energy in the United States. These are different policies than we may have seen from the U.S. over the last 100 years that are moving into more of an industrial, if you will, a more holistic view that I think amplifies Jeremy's point. It's really critical that governments be aligned, and it can't just be unilaterally what the U.S. wants to do. It needs to be globally within a broader community.
Talking about transitions, and you touched upon renewable energy, and Laura, I want to bring you in here.
Mm-hmm.
The other big factor that's going to play, which you spoke about earlier, was sustainability and this whole transition towards renewable energy. We are seeing massive investments.
Yes.
The International Energy Agency says that peak oil demand would hit by about 2030, and after that, it could start going down. So we could see a massive shift, and that could change the way some countries have been able to dominate. How do you see that now?
Well, I think the demand for capital will be huge. Take China as an example. It is the world's largest emitter, and it has also made a very serious commitment to be net zero by 2060, neutral by 2030, or neutral by 2050. So all of these decarbonization require improvement in technology. China already is the world's largest producer of wind turbines, solar energy, and so in renewal, it is leading the electric vehicle and all of that. But what is needed in the next phase of decarbonization is to make the renewable a lot cheaper, more accessible to a larger population, not only in China, but globally. And for that, we require technology improvement, enhancement, and that requires capital. And we will see that both China and the US are spending a lot of money increasing their R&D spending, and so are other countries. And a lot of the R&D spending are now focusing on the transition, on the sustainable finance, sustainable economy per se. So we can see that transition happening. And I think that also leads the capital, and that leads the spending and the focus. I think, in the US, what Todd said, the IRA is one policy direction. In China and another country, there are a lot of policy directions trying to cater to that. That has to be the climate change, how we cope with life in the gradually decarbonizing world is a common theme that requires everyone's participation. So I see that as a very important agenda item for all of us.
But Todd, just to add to that point, I mean, as Laura is saying, that financing and capital is going to play a key role in this transition. So it's a clear advantage for advanced economies, because there are a lot of countries, emerging economies, that would really, underdeveloped countries, that would find it difficult to invest that kind of capital. So it's really a case about a deep divide between the haves and have-nots. And could that impact the way the world shapes up, the economic order shapes up in 2030 as a transition happens?
Of course. I think it's part of the comments that were made in prior presentations that, if you have a decoupling economically, not just even politically, right? So I think we often talk about the political decoupling, but I think the economic decoupling is probably a greater risk. One of the dynamics as an American, I talk about, you look at the global geopolitical issues around the Middle East, issues around Ukraine and Russia. U.S.-China is less top of the list than it was at a point in time. And the reality, on assessment as to China, it's more of a domestic economy issue, demographics, just the growth rates, some parts of mixed, stronger manufacturing, softer services. It's probably more of an economic issue right now in China than it is elsewhere. And so I think, than it is, if I could, between the U.S. and China in that conflict. I think your comment's legitimate. I think the comment I'd make, nonetheless, is the emerging markets have kind of led the way through the coming out of this crisis. They were the first to hike rates, to attack inflation. They were the first to start to cut rates. And I think we believe that the U.S. is going to be slower to cutting rates, probably not till the fourth quarter of next year. Many people expect much faster cut, but we think it's going to take longer. So in some ways, the emerging markets are leading an economic shift right now. If you look, just bringing it back to this region for a second, if I could comment, because I think a lot should be said for the emphasis being put here on recycling of much of that windfall into the growth of the SME market, the desire that Abu Dhabi, I think, made the declaration that they want to double the amount of contribution from the industrial sector to GDP, currently in the single digits, to move that into double digit as a percent of the economy. That's a massive investment in an emerging market to make itself more relevant both domestically, but that will add to its relevance globally as well. So hopefully, there will be an emerging market leadership as not just all countries falling away.
We've got only 5 minutes left. So Jeremy, I'll come to you to sum up this conversation. I know that we can discuss a lot more issues that would impact the world order. If you had to look at the next 6-7 years, who do you think, which countries are going to emerge as the winners and which could suffer in the process if they don't factor in some of the changes, rapid changes that are coming in? What are those? I mean, I'm not asking for specific countries, but countries that are able to adapt to these changes. What are those factors you think are very critical and which could emerge as the winners?
Well, there's a lot of factors, obviously, and an earlier speaker had their 10 factors for successful nations, et cetera, which I thought was pretty interesting. Maybe I'll be a little bit more narrowly focused, which is, and this is kind of coming from my vantage point as a technologist and a little bit more focused on what's happening in the technology space. I continue to believe that, software-powered innovation, open networks, the application of open software networks, the embracing and building of systems that apply generative AI, embracing new economic infrastructure that's built up on the internet, which in turn, comes back to questions of how do countries allow capital to flow? How free are those capital flows? How progressive are those countries with respect to enabling higher velocity forms of capital formation to take place using some of these new infrastructures? Those are kind of infrastructure layer, technology-driven infrastructure layer choices that have to be made. My own view is that, similar to, say, post-2001, with the opening up of the internet and the opening up of e-commerce and the opening up of digital media and communications, the world has a choice to make now about the opening up of economic activity on the internet. And we could see capital markets that look more like Amazon's marketplace or the Alibaba marketplace than, say, the New York Stock Exchange. And kind of radically long-tail capital markets that allow for capital allocation to happen with extraordinary velocity and specificity is a huge opportunity. And so I think the countries that are out in front embracing that kind of technical and economic change have a stronger chance at forming capital and supporting the kind of investments that are needed in the coming 5 to 7 years.
Laura, what about you? Your final thoughts on this?
I think coming where I'm coming from, I think capital market, the role of capital market, to address your point of what about the emerging market, it is exactly, as I said, in the technology and in the decarbonization, sustainability, innovation, it requires capital so that the benefit of that can be spread to the developing population. And I think there's no better example than when we look at renewable. Renewable energy has to be massively available to the general population in the developing market. I think that will be a very major theme coming up.
Todd, I'll give you the final word. You heard what the other two panelists had to say. Anything you have to add, or you think these two factors, technological capital flows and the sustainability?
Well, I'm just a huge believer in the same way Jeremy would say he's focused on technology. I see technology as a tool to ultimately what I am focused on, which is capital flows. And so there's no question that digitalization, or whether it's blockchain or otherwise, will emerge as a core element of the infrastructure of financial services and the broader ecosystem. I have no question about that over time. It's a question of what's that time frame exactly, how does that evolve? It will evolve. I am much more focused on capital flows and being in the middle of those capital flows, and I think we sit in a region that has a tantamount critical element and contribution and participation in that, both for its own domestic good, but also for the regional good and for the global good. And so if we can all play a role in that, hopefully we can together create, a bit of a more positive forward. I think it's worthy of referencing the stability of the system, in spite of all the shocks that we see in the world, should give us a degree of confidence that we have a constructive forward.
Well, that's all we have time for. I'm sure we could have gone on and discussed many more topics and themes, but thank you so much for sharing your insights with us. That was a really interesting session, and we look forward to the next 6 years.